This right here is not the signal that you want to see if you are bullish going into options expiration tomorrow, and it's even worse when you start to see bad things on multiple different indices. So today we are going to be paying attention to some stock market analysis, right? We're going to be doing some stock market analysis, some technical analysis for the SPY Qs, Apple, Tesla, Amazon, NVIDIA, AMD, and Meta, looking into GME and AMC, and then we'll touch on the dollar, we'll touch on volatility and give that main take. But stick around because there's one signal on the macro scale that I haven't quite showed you yet, and it might be on the Qs. Let's get into it. As we talk about the SPY, we are going to give you those daily ranges if you would like those daily ranges for tomorrow for all the stocks that we're going to cover today, and a few more being the DIA, the Dow Jones, and gold, and all these other ones. I think Palantir and things like that. You can go see the whole list down there. You can get those actually by joining the Patreon down in the description. What this is a daily expected move for the close for tomorrow with a 68% confidence. So this is as high or low as the options market is pricing in these moves for tomorrow, and that's why we want to be paying attention to them, because they get it right a lot of the time. They actually got it right today. That's right. Our open up right here was directly on that daily expected move, and we saw resistance ever since. So tomorrow we do have those daily expected moves for you. 586.39 to the upside, kind of by the last previous high. And then we have 578.31 to the downside. So something key to understand with the chart that is in front of you at this moment is that's a very steep divergence. That's a very steep divergence, and that is confirmation at this point. So you have confirmed this, meaning that there is weakness in momentum here, and if we get some bad news or some selling to pile on, this can start to drop a little bit faster. Now we are overall in a bullish trend, so we always want to pay attention if we're kind of holding this 5-day. That's right, this little blue line, I'm playing with it. That is a 5-day moving average that I'm just having show up on my smaller time frames. And if we're able to hold above that, like the SPY is right now, we can always see the next move higher. We gravitate to that 5-day a lot. The 30-minute is positive, so pay attention if that turns around. But this is a sell signal, okay? So what we can do from here is see, was the 2-hour able to curl up? No, it wasn't. We confirmed the divergence up here, not necessarily on the MACD and RSI at the same time. So something we were leaning towards was making that divergence in the near price action on the 30-minute and then showing up on the 2-hour. And you notice it is there on the 2-hour and it is pointing down. So that's going to be something key. See if we're able to lose some of these moving averages, being that 5-day moving average as well, and then see if that leads to some downside. Now, we should expect there to be some kind of support at this level unless something crazy happens, because when you do see these signals and you get some bad news, crazy stuff can happen. What this means overall, though, is there could be weakness on the 2-hour. If this is able to go negative, we can start to rotate down the daily scale, and now you're starting to see a little theme here where we have multiple point divergence, and how this is leading up to almost a golden setup for the SPY to see at least some kind of little pullback in here, maybe some kind of corrective move to get down into this bundle, but it could lead us into a stock market crash if that turns down too much and turns over the weekly scale. We will be discussing the bigger timeframes on Saturday, so please make sure you're subscribed to get that information. Our Saturday videos are pretty fun when we talk about the weekly scale. And this is where I will show you that macro signal for the Qs, which is we actually did get another red bar here on the histogram and a crossover for the MACD for the Qs. So this big red day here, I know it wasn't too red because we ended up gapping up and giving it all away. Well, that is curling over the MACD as of right now for the Qs. Notice that the last time this did happen, we saved it the next day. So we are in an environment here where you kind of got to see that again, right? We're in another environment where we really want to hold up for the Qs if you want to get bullish over the next couple trading sessions. So be very cautious with stocks going forward. That is what this means. At major tops, a lot of the time, the Qs make that lower high, the SPY goes and makes that divergence, and that's exactly the look that we have right now. And we have more and more divergences showing up across the board for a lot of other things, okay? So we want to get into these shorter time frames, though. We want to get you guys those daily expected move. Once again, if you want the daily expected moves for the stocks that we're covering on this channel, and a few more, right? There's a few more on that list. You can get those daily expected moves. It will help you a lot with profit taking, especially around options expiration, because if you say have short positions because this is crossing over really close to the center line, that's not a good sign. It means you can take out this low and go make a new one. And where would that most likely be? Well, the options data gives you a hint, and these are the best support and resistance levels that you are really going to see out there when it comes to support and resistance, right? And we can use that on the yearly scale, this thick red line. line. We've ended up above it, and we quickly end up going lower than it because this is the as high up as the options market saw us going for 2024, and it's coming into play here. So if we're going to head down to this level and I have expiration for tomorrow, well, that's as low as options are priced to go for tomorrow. We can obviously see a move through that. This is only a 68% zone. Okay, so we can see that actually continue, right? We can see selling continue, but that's just about a 32% chance to see something crazy. You are more likely to end up in this zone. This is a bad sign. You're curling up, you're curling down, and that is really close to negative territory. And it's funny because even in the short price action, you have the SPY going and making that double top divergence while the Qs can't catch up. And that's what you see on the macro scale at major tops. And now you're seeing it on the smaller time frames as well. So very sketchy look there. Look at the 2 hour here. We were looking for this to cross up. We genuinely were looking for this to cross up. You have flat divergences across the way, and you're like, okay, we need to cross up. If we're going to go, we're going to see this thing get to 500. We're going to keep going. We're going to keep going. We're going to make a new all-time high. Well, that didn't happen. As of right now, rejecting on the 2 hour. Notice that it is still positive. So if that curls up for whatever reason, we should still expect positivity. And maybe this is just some kind of reach down to grab some buyers. Those are kind of the things that I'd be paying attention to for the Qs, but it is not a good sign on the daily scale to get that red bar on the histogram. Tells us, hey, we should watch out because the daily scale for the Qs is looking like, hey, it's at least going to get a pullback. And if that pullback is too much and we cross over some weekly charts, things are going to get ugly pretty quick. I was watching Apple very closely because even though we got these kind of moves, well, it's looking pretty controlled to me in this area. So I want to pay attention anytime that MACD does curl over, because where is it? It's close to that center line, right? It's really close to that center line, meaning it can go into a negative trend pretty quick. And the big problem with going into a negative trend here is you've already confirmed a 2 hour divergence across the way here. You've confirmed that across the way, and you kind of have multiple point divergence when it comes to the RSI. So that is not a good look. It means the daily scale can start to turn down. So if we start to lose some trends here, we could end up seeing that negative trend come into play very, very quickly. And maybe this is something that happens a lot with OpEx. Maybe we're going to see some things that cause some weirdness over throughout the day tomorrow, and then we end up seeing things actually crash down over the weekend. Genuinely, that does happen. Something bad can come out over the weekend. They do that on purpose a lot of the time, right? So what we're paying attention to here is that 2 hours cross down. Something we need to watch here is if that daily crosses down. That's going to be your main signal that says, hey, Apple is going down, and this definitely was a trap, and now all of this energy that you've built up might be distributed to the downside. And that's not going to be a good look for Apple going forward. So it is a time to be very, very cautious with this one. But just to keep your spirits good, the 30-minute has not crossed over yet. So make sure that is crossing over before making any decisions as far as Apple goes. Tesla, I am overall hating this look. I do not like when things just move completely sideways, almost look like what is going on here, because this drop down with that event and then it is just sticking there, which is very, very strange for Tesla. Tesla is a stock that is known to have a ton of implied volatility, and we have seen no kind of move this week as of right now. We're trying to build back up into positive territory on the 30-minute. That's all you can really take away from this. But when you do see a major drop, a lot of the time you like to reconnect with the 5 before dropping one more time, or you can take that back to see that upward move. But you notice, what are we doing? We're moving sideways into the 5. And so all you have to do here is like get one firm crossover and that thing is going down. So we can pull up a 2 hour. You notice that that is moving up, but it's really just bouncing with time, right? It's just moving sideways, getting a reaction towards the 5-day moving average. And then we'll see if that's able to cross down. When we want to pay attention for positivity is if we get in this buy zone and we see a look kind of like this, that would be a good sign. The only problem is that might run us into earnings, and earnings is always going to be a 50-50 flip, because we know that you can say 10 bad things or 9 bad things about a stock and say one good thing, and that's just a good enough reason for the market maker to shoot a stock higher. So just pay attention going forward. Overall, Tesla showing that I am very, very negative, and that negativity is the most likely, the most probable thing to happen is for that to continue at this moment for Tesla. Amazon, we were talking about this move being a lower high because of the weekly divergences crossing over and confirming for Amazon. That did happen, and now we're seeing that struggle to cross back up for the daily scale. So something to pay attention to here is going to be the 2 hour. Okay, the 2 hour is how you overall get bullish, right? That 2 hour curls up into positive territory, and then maybe we can go test this high up here if we wanted to build some good structure, that might be a handle to head higher. That would be an overall bullish look for Amazon. So something you do not want to happen if you don't want this thing to go down, you want it to go up. You definitely don't want this 30-minute crossing down, okay? That is close enough to negative territory that can be bad, and maybe this is some kind of A, B, C move to the downside here for Amazon, looking a little bit bigger flag in here. So that is a ton of liquidity being built. So watch out if this thing drops, because you do have structure in order to head lower, right? Even if we kept that little line right here, well, you could react down, get some kind of retest in the top of our zone, and then see that curl down with a nice head and shoulder. So that's something I'm paying attention to for Amazon. But just to show you guys on the weekly scale what we were talking about, even though we're going to talk about this a little bit more on Saturday, so make sure you're subscribed, was, well, if this is crossing up, then we would say, hey, overall, if that's a positive bar, then we should be saying, hey, this will go up for a few weeks. But for the most part, we did see that at the top up here, you have a big divergence. You have it on the MACD and RSI at the same time. That leads us to believe, hey, this is pretty deep. It's going to be difficult to actually go back up again. So we were overall saying this could be a lower high in this area. So I'd really pay attention to Amazon if that 30-minute does cross down. When we get to NVIDIA, which we are right now, you can see that this is another point where we can see major weakness coming in if this daily scale does turn down. We have a divergence all the way across here, right? Sometimes we don't want to take that into consideration too much, but it is on the weekly scale, so I'm going to talk about it. This is the signal of weakness that we're looking for, is if that daily curls down, bad things can happen. And we were looking for this today because of the 30-minute chart. We were stating how, hey, this is the first sign that some major selling could come in because of the 30-minute divergence up here, but it's not the best looking divergence. Watch if we curl up, because we always want to pay attention to how we can get screwed. That's what we talk about in the course. At one point, we do have a whole video on how to manage your trades, and that's exactly what should have happened when this thing curled up right here. But this point right here, 134.39, there was no reason for NVIDIA to fall. But guess what? Now you do have that reason. You have a significant divergence on the RSI, not necessarily on the MACD, kind of flat here. So that's interesting to me, but this is saying, hey, I want to head to lower levels. We are up towards that weekly expected move. So these are all good things to see if you are bearish here. And once you pull it up to a 2-hour, it's a totally different look. So if that 2-hour is able to turn down for NVIDIA tomorrow, watch out, because that is a very steep little divergence there. I know it's small. I know it's a tiny little line on the MACD and RSI right here, but you need to pay attention to it because that is very significant. Look at the direction of that line when I draw it. It is down while this is up. So that means that there is a high probability for weakness here, especially if this crosses over, and especially if we get some bad news behind it. This can lead to some bad things for NVIDIA. If you want to learn how to find trade setups like this, why we're talking about NVIDIA, why we've been talking about a 30-minute divergence, some kind of trap to the upside here during this move today, we were talking about it during the live video a little bit. Get those courses down in the description. The technical analysis course, it's for $100 right now, is 90% off, and that will be going away soon. So get it while it lasts. Dedicate yourself to some learning over the weekend. We have plenty of people who email me every single day and say, this is something that has really changed my trading, and I hope it can help you out as well. It's a good thing we were paying attention to that 2-hour divergence for AMD, and this is what we were talking about. If AMD is going to be super weak, if SMCI is going to be super weak, if Microsoft's still holding at lower levels, if Google is still holding at lower levels, then why is NVIDIA really looking like the biggest trap of 2024 to me? And we notice that there is a divergence on a 2-hour. Look how significant that was. So you want to pay attention to them when they are significant, because this point right here was the entry, and it said 170.65. These are the type of setups that we look for. This is what the course can teach you, because 170.75, something like that, well, that was confirmation and said there is no reason for upside for AMD on a 2-hour chart. And you notice that that was very bad to the downside, because it never turned back up. It never got bullish again. We can always see turn ups, right? When we get into a 30-minute, at this point, we want to be paying attention to if we're forming divergences, if we're forming double bottoms or something like that. But you can see how that 30-minute is close to going positive. But if that would curl down, that would not necessarily be the best look for AMD. That means overall we would be continuing the negative trend. You notice on this big push down, we went into that negative territory. We bounced back up and we curled down into negative territory again. What does that mean? The negative trend is going to continue. This is overall kind of what we look at in the swing trading course. But for the most part, we're moving sideways, and look at that 5-day starting to catch up. What did Tesla do? Well, it moved sideways sideways till that 5-day caught up. And a lot of the time that will happen. And then once you catch up to the 5-day, you get the opportunity to say, are we going to take the 5-day back, or are we going to confirm more downside? The confirmation of more downside here is that 30-minute MACD curling over for AMD. One thing you can pay attention to is if a divergence forms, you want to be ready to react for that, because that could mean a bullish reversal is there. We will be talking about AMD a little bit live tomorrow if we start to see that set up. And Meta's kind of in the same boat, right? Giving us the double top, okay? Giving us the double top up here. That's what we were talking about. We were like, okay, pay attention. This could cup and handle in some way, right? This might have violated that, but we would say, hey, maybe that's going to consolidate before a breakout. But we have to always be aware of both sides. It is good to be a flip-flopper while trading. It is good to trade like water. That's what we say on this channel. Pay attention to both directions, and then try to find the direction that it's going, see which signal is proving to be playing out, and then you want to end up taking that signal, because you want to end up in the meadow. You do not want to end up in the sewer with the it clown. So in this scenario, if you didn't want to end up in the sewer with the it clown, that means that from this point right here, 592.39, there was no reason for bullishness. Now you're experiencing some kind of bounce. We actually went and retested the breakdown area. Fantastic behavior so far. And now you can see the little tiny blip here that could be a little head and shoulders forming. If this 30-minute does turn down, hey, bad things can continue. You're continuing the negative trend at this point. So that is something bad that you want to pay attention to. If we gain some steam here and the 2 hour is able to take this back, we still want to treat this from kind of an unbiased lens the most we can. If the 2 hour, if the 2 hour does cross up here, well, we could react to this level, see some kind of pullback, and this would be the overall structure to head higher for Meta. I just think that that is slightly unlikely, as Meta has been going up and up and up and up on the daily scale, curled over about 4 days ago, and a lower price point would be a solid pullback, right? We're still talking pullback for Meta until we see some of those macro signals confirm across the board when we're looking at stocks on Saturday. But for Meta, you could still experience this pullback that pulls down into the 50 and then curls back up into positive territory. We will be paying attention to the shorter timeframes to see if that is plausible. I think it is a little less likely with how everything is shaping up in the market as of right now. AMC did something good. The only problem is I know that it's green. It is a negative bar. If I hold my cursor over it, you're going to see AMC was down 0.24% today, and you're just going to notice that the MACD was able to curl up. That is a good sign, right? We did have a little bit of signals in here saying, hey, yeah, this has an opportunity to get some kind of bounce, and that is leading to the indicator saying, hey, momentum is going to shift up here, is what it's overall saying at this moment. You want to pay attention if that just reverses right back down, but for the most part, we are going to update you on that crazy level we need to get past in order to see something crazy, right? If you want to see some kind of gamma squeeze that then leads into a short squeeze, that's what we're paying attention to with this red line on your chart here, this red line 458. We do have the daily expected moves for AMC and GME over on Patreon in the description, but 458 was the level for this week, and that changes every week, so please subscribe so that we can give you this level on Sunday. That's what we give on the Sunday video. Something we were paying attention to is the 2 hour, right? The 2 hour moving sideways here. We noticed the divergence. That's the signal we were looking for. We got that confirmation, and we have not seen extreme positivity since then, but these are the type of looks where you really want to start to pay attention to things like AMC and GME if you want to be a part of that big moment, because this is a good sign. The bad sign would be if the 2 hour does turn down here. That would be a bad sign for AMC. Now, as we go over into GME, we had a similar little divergence down here. That led to a pop, another one down, or well, not necessarily down here, but we're trying to curl back up. Notice that if the 2 hour curled down, that would be a bad thing, but if we can curl back up, we might have a divergence there for GME. GME a little bit different than AMC, right? Had some great divergences here. So GME is saying, hey, I am gearing up. I'm getting tight. I'm about to see a very, very explosive move. Maybe we should pour some Japanese mayo on it to see if we can get that thing going overnight. But for the most part, we just want to see, is this daily going positive? That's going to be a big deal. And this type of signal down here is saying it has a good probability to do so. 2222 is the level that you need to get through to see something crazy for GME, but we are going to update you that level on Sunday as well, so make sure you're subscribed there. Now, there is one signal that is saying, hey, we have potential for a short squeeze. The volatility VIX was able to cross down, saying, hey, I might need to go test something like 1683 or the 200 at this point. It is saying that, but anytime this did not cross through the 50. So we were more leaning towards, hey, we're going to see some kind of squeeze if we cross down on this MACD and cross through the 50. We have not done that yet. We are still holding the crash signal at this moment, but this is something to pay attention to. Don't get overly bearish before we see macro signals confirm for some kind of crash, for some kind of bear market, even though we are behaving like a bear market already when it comes to volatility as we reach all-time highs for the SPY. It is very, very sketchy behavior right now in the market because it's gearing up like we're in a bear market right now, but we keep hitting all-time highs. So that's very interesting to me. I just think it's an interesting market, but we have not lost the 50 yet. So now this signal, I have to take it with a grain of salt and be like, we haven't lost that 50 though. So I don't know if short squeeze is the most probable thing to happen here, especially when I pull up a 2-hour and I'm noticing that there's some forms of divergence down here. You have kind of a flat one on the RSI, but you can see on the MACD it's rather flat as well. So a little bit down here actually for the MACD towards the end of the day. So a little bit down. You don't necessarily have the divergence here. We just want to pay attention to any time that turns up and goes positive on the 2-hour, because you do have the setup for this to really be gearing up at this point to head higher. If we're at all-time highs, usually you're down by 12. Why the heck is volatility remaining right around 20 at this point? It just means if some bad news does come in, volatility can really gain some steam, because the last time we were paying attention to it and volatility really came in, we were at 12. Well, now volatility can come in and we're already we're pretty much at 20. So this could get very ugly very fast. So I encourage you to manage your risk. If you don't know how to do so, if you're still using stop losses and those are ruining you, well, we teach you how to actively manage your trade in the course down in the description, the technical analysis course, currently 90% off. So that's something key to understand with volatility. Now you're probably thinking, well, volatility is turning down on the daily scale. So why do I think that this is a big deal to even pay attention to? It looks like a short squeeze signal. Well, the big problem is, look at the dollar, even after hours, still remaining at higher levels, just screaming higher, even on the weekly scale. So this is turning into a weekly trap. And if that confirms tomorrow, this can mean that insiders behind the curtain, guys, insiders behind the curtain are selling stocks and moving into cash faster than I have seen in a long time. So we have to pay attention to that, because why are they moving into stocks or moving into cash even faster than over here? Well, they might be moving into it because they know something that you don't, and there's about to be some kind of rug pull. We do notice that we have lower levels, right? A lot of people starting to go to the call side as we hit these all-time highs, which is exactly the trap setup that they want to happen, but maybe we do see a little bit of funkiness in options expiration. This is something to pay attention to. Why are people flying to cash all of a sudden really, really fast? And why is this happening? And we're not seeing any selling come into the market. It means that as a trader, you have to be very cautious. The main takeaway here is we have the first domino, right? We kind of have the first domino being the shorter time frame is giving that little divergence, but this is the main thing to pay attention to. Look how significant that weekly is. This is what we're going to talk about in Saturday's video. So please subscribe to this channel so we can be helpful for you, and pay attention to this signal tomorrow. We are going to be live tomorrow morning, and I might even, if things get crazy, do that closing stream, because I think that things could get a little bit wild, but I also think there's an opportunity for them to force stocks to remain at higher levels until we actually see the weekend and see if something bad comes out. Because even if you have these divergences, you still need bad news to really turn them down. And if that does turn down and we turn down a weekly scale, it's not going to be pretty for stocks. And it looks like we might be getting that crash to begin right now or going into next week. So thank you guys so much for watching today. I really do appreciate it. You guys are fantastic. Thank you for liking, subscribing, people really emailing me about the course. I think that's awesome that it is still helpful to the new people coming in. So make sure to like this video so more people can get encouraged to learn about these indicators, not just what they are, but how to actually use them and understand them better than anyone else out there. And then learning how to manage your risk in your trade, because that will really help you. And you will most likely be better than like 90% of traders, because people do not manage risk correctly a lot of the time. Thank you guys for watching. I really do appreciate it. Have a great night, and I will see you tomorrow. Peace.